and that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, a daily stock market show where we go through actually more than just the stock market, economics, commodities, currencies, anything that's on our mind, and have some fun while we're doing it, breaking down the news, the information, the charts, the analysis. And welcome out to everybody out there. If you're a veteran, you know the deal. Hashtag Team Tackle in the chat. Click the subscribe, click the like button as well. If you're not a veteran, you're brand new to our channel, make sure that you come back and join us each and every day, 12:30 Eastern. On today's show, we got a full crew, actually. We've got Coach Tyler Craig doing some analysis for us on the markets. Matt's running the screen. We've got Emily Mururi here from the Women in Trading blog. And by the way, new social media pages up for you, Emily. Let's make sure that we get those out there in the chat at some point here today. Looking pretty good on those social media channels. We've got Mark and we've got Cody and myself here, Coach Tim Justice. ADP numbers today. It's kind of a prelude to the jobs report tomorrow. It's going to be the monthly unemployment report Thursday morning. Usually happens on Friday, but we don't have markets open on Friday this week due to 4th of July and Independence Day here in the United States. We have a bank holiday. Make sure you get out of the office and go do something. I think Matt and I are going to go play golf on Friday. ISM manufacturing numbers came in. They're above the 50 line. I'm going to get Matt's take on that. That indicates expansion. Pretty good numbers there. Some interesting news in terms of corporate news. Constellation Brands, FedEx had earnings reports, Beyond Meat, Netflix, Facebook, and more. Let's get right down to it. Matty, how you doing, sir?
Tim, doing good. Excited to be here with the crew and excited to get Coach M and Tyler and Mark's take on the market today. And, I'm taking a little bit of a backseat as I get ready for tonight's webinar on identifying support and resistance. So we got a full schedule over here at Tackle Trading. And just guys, as if you're excited to come into the event tonight on our YouTube channel, once again, you just go to Trade Center, events calendar. And you can find the link, I believe, on our calendar right here. If you go down to Wednesday, identification of support and resistance. So I will be going live here at 5 p.m. Mountain Standard Time, 7 p.m. Eastern Standard Time. And we're going to have a lot of fun, Tim. Obviously, I'm going to teach support and resistance, support catalyst, resistance catalyst, a little bit about candlestick analysis. It's going to be basic in general. So for the veteran, hashtag Team Tackle, if it's a little bit of a review, that's okay. It's good to have a little bit of review, but for all of Tackle Trading, for people that are new to Tackle Trading, I'm excited to hang out with the crew tonight.
Support and resistance are bedrock principles in technical analysis and learning to read a chart and all that kind of stuff. The longer I do this, guys, the longer I'm around new traders, educating traders, being a trader myself as a part of Tackle Trading here in our community, simple concepts are crucial. They're just so important to be able to truly understand the value of that. And Matt, I'm looking forward to the webinar.
And I'll tell you, Tim, as somebody who's been in this industry for a long time, all around the world in this industry, the one thing I truly do believe is that as an educator, as a trader, as a veteran, okay, I think it sometimes this philosophy can impact all the exact same way. We always try to find the most complicated answer because that one makes us sound the smartest.
Sure.
And the reality is you go out there and you read those technical analysis books, and there's some good ones, but the reality is there's 300, 400, 500 pages in those books because they can't sell a book with 5 paragraphs, bro. And so from an educator perspective, I believe in keeping things simple. I believe simple has worked in the market for a very long time. And I think the more complicated you get as a trader, the more complicated you get in your systems, the more complicated you get in terms of identification of potential trades, the more complicated you get in general. I think it makes you a worse trader. Keep this simple. And so it's going to be a little bit of a review for, the pro members of Tackle Trading, but hopefully they come out there and support Team Tackle, support the new members, and give the new members a little bit of love.
We got a question in the chat I think is very important. One of my favorite people on the planet, Sylvia Cook, a coach out there. Sylvia says, will Marty be a part of tonight? And
Sylvia, you have no clue about this going on right now because I literally spent about 6 hours yesterday thinking about how am I going to reintroduce Marty to the people who don't know Marty. I mean, the people who know Marty, they already love and respect him outside of Tim. So other than Tim, I don't know. But yes, Marty's showing up. It's just a matter of Do I go 4 hours with Marty or do I go 4 minutes?
I'll make you a
I just
promise.
don't know.
I'm going to put a timer on my computer. If it goes past 5 minutes, I'm leaving. So I'll tell you that right now.
Listen,
I can't
you act
handle
like I need you there to talk.
That's true.
Matt, don't worry. I'll be there with you the whole time. Tim can leave.
That's
We're
a true
good.
friend right there, Em. Oh,
Ty-
Heather. Oh, Heather. I've actually done 4 hours with Marty, literally on a screen for 4 straight hours. So just Marty just teaching technical analysis. So, but no, I will not be going 4 hours. No.
Tyler, come on in here for a second. I just want to get one question for you real quick before we start breaking down the markets. You wrote a newsletter in June. Mark's going to be writing the one for July. I love the way you guys actually do that for Trading Justice. Love the newsletters. And you did a webinar on this. What are the 3 pillars of technical analysis, Tyler?
So the first is that price discounts everything, right? So we believe that when you analyze a stock price, you're simultaneously analyzing the political environment, sentiment, fundamentals. It's all baked into the price, which simplifies your life, and it's kind of a one-stop shop, right? I don't feel like I necessarily have to analyze a million different things to understand if Apple is bullish. I just look at its price, right? So as a technician, you really buy into that, number one.
Mm-hmm.
Number two, that prices trend, right? That they're not utterly random, that we believe in the power of trends, uptrends, downtrends. The idea is to identify the trend, jump on, ride it. And so a lot of what we do as technicians is we identify the current trend of the market, right? These guys see this every day on the halftime report. So that's number two, prices trend. Then number three, that history repeats itself, where there's a certain degree of repetitiveness with patterns. And that is because human nature doesn't change. And so everything's different, in 2020 than it was in 1920 in terms of technology, the political environment, et cetera. But what's not different is humans and fear and greed. And so the way that those impact collective decisions on Wall Street are the same. So you'll see the same patterns play out again and again and again over time. Mm-hmm. And that's it. And those 3. So prices trend, price discounts everything, and history repeats.
Price, and trend, Matt. I love that. I mean, simple stuff behind the bedrocks of technical analysis, no doubt about it. By the way, this week, really, I mean, if you're going to describe this week's action in the market, there's news headlines, there's interesting corporate news, you bet. We're going to get to it, but really support help. So the pattern came down, the price came down and tested it, and it held, and now it bounced. Now we're pushing into a resistance level. We'll go through the news headlines here in a second, Matt. What are you seeing in the chart first? Just a pure technical read.
The pure technical read, and we said this on Friday, is specifically when you're sitting at support, it's really it can be a complicated form of analysis because you have price coming down into support. And so you have price depreciating, but you're looking at picking it up. And I think Mark said it best on Friday. When in doubt, bet on support, right? Outside of all economics, outside of all fundamentals, outside of all indicators, outside of everything in the entire market, when at support, bet on support until it is violated, and then you have to reassess the situation. It's like, Mark, you're an old-time poker player, professional poker player. When you have the odds in your favor, you push the odds, correct?
Oh, absolutely.
Right. So when you have the odds, you push it. You have the odds at support, whether it's 52, 55, 62, you have the odds at support. And that's what I'm seeing kind of just this week. And like I said on Monday, if you're the bull in the market, right, whether you're looking at those depressed areas of the market or you're looking at those potential breakouts of strength in the market, that's what you wanted to see. You wanted to see that first day of support really hold, and that's when you start coming back into the market, and then you want to see the confirmation coming in through the next 2 days, and that's what we're now seeing. So obviously right now I have less concern about the market in the short term because support is held and you've had a little bit of follow through. Now what we're looking at is we're approaching these resistance levels as resistance, as support held right here. We're approaching the resistance levels, and this one becomes a little bit more difficult. Support, we had a lot of evidence at 2760, 2770 by 3000, a lot of evidence in that ballpark. But resistance here, this is where it becomes a little bit more difficult before you get aggressive in the market, because now you're coming back up into resistance. You're above all the moving averages here. You're above the 200. You're above the 50. You're above the, the 9, the momentum moving average. You're above the 20 now. That's a very positive sign in the short term. And now you're bumping your head into resistance. Now, where is that resistance trigger that you say, okay, I'm already bullish. You're bullish because of the support bounce, but where do I start getting a little bit more aggressive? That's the ultimate question here. And when you have, a lot of times you have clean triggers, and I'm going to talk about clean triggers tonight, because when you hear us talking about triggers in the halftime report, some of you may not know exactly what we're talking about. A trigger is just where you're looking to put your entry order, where you're looking to put your stop loss order. And when you have a clean trigger versus something that is unclean, it just makes it a little bit more complicated with an unclean trigger. And so with a clean trigger, you can just say, give me something above 3130 and let me rock. Well, when you have these wicks, the difference between a clean trigger and an unclean trigger is the wicks here. When you have multiple wicks versus multiple bases all doing something different, it does make it a little bit more complicated. And the zone of support and resistance is expanded because the zone of those volatility, the zone of the wicks has expanded. So at what point do you call this a breakout? For me, that's 3150. That's for me. And it's like, it's that legal mindset, Tim, that really is installed in me. It's that you got to let the evidence do the dictating, right? You cannot force your opinion on the market. The plethora of the evidence is what should point you in what direction, a price point that you want to trigger above. And so for me, when you got a lot of information between really 3120 and 3150, but ultimately you have 4 different data points there at 3150, I got to give credence to that data points because that is overwhelming to me. So I like it here. I like the support bounce. This is what you want to see the beginning of this week. I love what Tyler said about technical analysis. I could talk about all the economic reports that came out. I could talk about J-Pal. Oh, it was so funny. J-Pal, you need to learn how to wear a mask, my friend. You got to learn. You got to cover the nose, J-Pal. J-Pal, you got to cover the nose. It doesn't help unless you cover the nose. And did you see the elbow bump between him and Steve Mnuchin yesterday?
No, I didn't. I didn't.
Fascinating. Beautiful thing. I could talk about all that for 6 straight hours right now, right? And it doesn't matter because as a technician, what technicians believe is that stuff is baked into the marketplace, that everything known is embedded in price. And so if you're the bull, this is what you want to see over the last 3 days. The data has been lukewarm this week, but you like what you've seen today in the market. You like what you saw with support holding in the market. And if we can get back to being a little bit more bullish, that starts with a breakout of 3150, in my opinion.
Tyler, coming into the week, obviously we had that candle on Friday that was quite a precipitous red candle. We were testing support. We didn't break support. We did do like a slight downgrade on some sectors in the market, still keeping many of them in the bullish territory because support was holding at that point. You got to love the price action coming into the week if you're a bull, Tyler. How are you approaching the market, and what are you reading from the first 3 days of trading here?
Dude, I think Matt nailed it. I mean, what more could you ask with the response to a big red bar, which was Friday, into support? Nasty close too. Like Friday, things didn't look good going into the weekend, right? And not only did you not gap lower on Monday, these 3 green bars. I mean, if you look right now, we're at the high of today, right? We're effectively the highest we've been for the last 3 days, which means we held the gains from Monday. We held the gains from Tuesday. We had a faint lower this morning, by the way, lower wick on today's bar. That was bought and back up. And we're going to look at individual stocks here in a second. But there are a ton of stocks ripping. There are tons of breakouts right now. Technology looks great. You look at the NASDAQ. The NASDAQ bounce held. Who'd have thunk, right? Once again, the 51st bounce in the NASDAQ or the 51st pullback in the NASDAQ was bought yet again. Trends be trending, Tim.
Is it trends be? Oh, I got 2 things. Trends be trending. Number 1. That is. I am using that from now on.
Tweet that out. Tweet that out.
Trends be trending. Cody, get that on Twitter. That is amazing. Number 1, that is truly amazing. 51 times. Now, Tyler, I got to know, because I know you're an analytical guy. Did you count the last 51 BFTDs? I mean,
that's a little bit of hyperbole right there, my friend.
Okay, fair. I just wanted to make sure. No, I figured as much. I thought it was going to be close, because whether it's 51 or 61, it feels like every single one of them have been.
Hold on, time out. Did you say the word wrong? Hyperbole? Or
I was a joke, Tim.
all right.
I know how to speak. Come on.
Get some more coffee.
I just had to clarify there. Sorry. So obviously a little bit of a joke, but trends be trending here. Guys, Matt, that intraday chart, when you were looking at that, we were going through it, by the way, it wasn't just random. We started running on that unemployment data. And it's been a playbook in this market for a long time, because Tyler, it was actually a little bit weak coming into the cash open. 5:30, 6 o'clock this morning here in Utah, started to pick up a little bit, but then at 6:30, Matt, that 8:30 Eastern unemployment report, market started running again. And that usually, we've seen that so often in the last 2 or 3 months, by the way. Economic data pre-market before the cash open are starting to drive the market. Yeah.
The ADP non-farm payroll came out today, and obviously we have a light week. It usually is Wednesday, then initial claims on Thursday, then the unemployment number on Friday. Today we get the ADP non-farm employment change today. We get initial claims and the labor numbers tomorrow. But you're absolutely right, Tim. It was showing some a little bit of weakness. I do want to look at that NASDAQ chart, because if you want to talk about the strength of the market is the NASDAQ. And that I think in America today, where every single person disagrees on absolutely everything, even if we do agree on things, I think we can all agree on one thing: the NASDAQ's number one in the marketplace. Can we all agree on that?
Mm-hmm.
Right?
Oh yeah.
So NASDAQ's approaching a breakout that we got to break down. So in that capacity, but Tim, you're absolutely right. Tyler, you're right as well. You showed some internal weakness here during the European markets. And so midday during Europe, and Europe opens up about 2-3 a.m. Eastern Standard Time. And that's right into this ballpark. You showed some weakness here. Now, that could have been on the backs of some news. I haven't checked the European news today. I was kind of running late here this morning. But that was probably on the backs of some European news that came out during mid-session, maybe a central bank act out of New Zealand. I don't know. Like I said, I'd have to check. But initially, you did see some initial weakness. But right here, Tim, okay, right here, it's not shocking that this is the data point. This is the candle where you saw price appreciation, thus breaking this short-term trend. So what was it after the European weakness here? What was it that came out to shift this trend? Because on an intraday perspective, when you break intraday support, you see price depreciation. Well, that specifically was the very second that the ADP non-farm payrolls came out. And the number came in, and let me get Forex Factory over here so everybody can see what I'm looking at as well. Looking at the number here, Tim, let me get it real quick. ADP non-farm employment change, we were expecting 2.8 million. We came in at 2.3. Again, economy reopening up theme, good economic data. It's so weird to say good economic data when 2.3 million. It's so weird. I'm telling you, every time I say it, I'm like, oh man, that's 2.3 million people that don't have a job. That is a shocking number. It's amazing how quickly humans just adapt to new information. Mm-hmm. Because if you were to see that number 6 months ago, you'd be like, did the world just end? Right? And mm-hmm. Then 6 months later, like, well, yeah, the world might be ending. Yeah, that's why that number is the way it is. But no, it's a shocking number overall. But in comparison to what we've been dealing with on a month-to-month basis, look at where it was, right? And so, to see that number come in, in comparison to what we were seeing in the last 2 months, yeah, it's really good. It's really positive in my opinion, Tim. You saw that number come out and look what happens. Boom, 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 boom. And now you're looking at perhaps another breakout above that 31 handle. So you're absolutely right. Economics do matter. Still, Mark, economics do matter.
By the way, even after that ADP number, I think actually the more positive data in terms of my personal opinion, Matt, was the ISM number. Manufacturing above 50 is expansion.
ISM, yeah, go ahead, T.
I mean, that indicates expansion. That 50 line is kind of like the line in the sand. Anything below it, you have contraction in manufacturing. Anything above it, you have expansion. It came in higher than expected, above the 50 mark, and 9 points higher than last month. So we are seeing, whether you believe the data or not, that's a different conversation for somebody else.
I believe okay, let me put it like this. I believe the data in our economic reports in the US are accurate for what they do. All right. So for example, I don't think there's massive manipulation in the CPI report. I just think the CPI report is not the best and most accurate, economic report or data to really determine what inflation in the US is, since we discount certain industries in the CPI report. So it's not like the data in the CPI report, you can't trust the number. You can trust the number. You just know in the back of your mind that it's not tracking everything. Does that make sense?
Yeah. Mm-hmm.
Same thing with the labor numbers. When you look at the labor numbers, and like, for example, we're getting unemployment rate tomorrow. Well, what does that unemployment rate represent? That's the ultimate question. What does the CPI ultimately represent? Well, in the unemployment rate, that ultimately represents the amount of people in our economic system that are actively receiving unemployment benefits, right?
Mm-hmm.
So that is not an accurate indicator for the entire labor market. The participation rate is a more accurate number in the labor market. The true unemployment number, i.e. the people that are receiving benefits and the people that are no longer receiving benefits but still want a job, they aren't on the report. So it's not that the numbers itself can't be trusted. I trust this 52.6 and I trust almost every manufacturing and service PMI numbers we get out of the US. I don't trust China's, but I do trust the US numbers. Mm-hmm. It's just some of these economic reports just don't track what you would think would be true unemployment, what you think would be true inflation, what you think would be true, whatever economic report you're looking at. So I like this number as well. I was pointing to the ADP non-farm roll because that's when the market really kind of turned. It was an hour and a half later when manufacturing came out where it gave it another boost. But this is a really positive number as well from an economic perspective. Yep. We saw yesterday, or it was 2 days ago, we saw a little weakness out of Chicago, but we've seen strength out of New York. We've seen strength out of Philadelphia in those manufacturing. So Chicago's kind of like the lone wolf right now from a manufacturing perspective. This is a positive number in my opinion. The labor numbers were positive and the market took it as such.
Mark, how are you approaching tomorrow's unemployment report? Are you doing anything differently? Because that's the big one, right? Tomorrow, 8:30 Eastern, the monthly unemployment rate number. We had such a massive report last month that was, came in very, very much above expectations, all that kind of stuff. How are you approaching tomorrow? Are you doing anything different with your trading? You managing naked puts differently? You see risk in this report? Because I expect revisions, looks like Match is moving here. We'll take a look at that real quick.
Well, Mark, go ahead. People talking about it in the chat there, and I haven't looked at the news on Match here today.
Looks like intraday news. Cody, look up that news on Match if you can.
It came out right when the market came out. I mean, it didn't gap here.
No, I mean, like the unemployment report is always a fun day trading day. So like whenever you have a big economic report like that, I mean, day traders love days like that because you can get significant moves. So outside of that, we've seen nothing but a positive string of surprise to the upside economic reports. The unemployment report, you might be able to trust a lot of other data, but if anything, it's going to surprise to the upside. It might also be manipulated tomorrow to the upside, but all of the trends on economic reports have been trending to the upside. So it'd be very surprising to see that trend not break.
Yeah, it's going to be an interesting one. I'm looking forward to tomorrow's show so we can break that down and see what happens. For today, though, markets are up. And in fact, Matt, you were mentioning earlier, I don't want to move past it, the NASDAQ and the strength in technology. I want to bring that back up for a second and bring Emily in here for a minute. Emily, I know you real well. You're a coach, Tackle Trading, the head of the Women in Trading Initiative, the group there, and all those kind of things. And one of the things you love trading are tech stocks. And as I'm looking at the market, Emily, this is where the strength is. Have you been approaching tech stocks mostly like every other trader? I mean, how are you playing this?
Yeah, I mean, we've just been riding the wave. That's been the theme, it's for a while, it's just riding the wave. So that's what I've been doing with, all the tech stocks like Zoom and DocuSign, Apple, I love my Netflix and all the other kinds, Amazon, obviously. So yeah, it's just
Amazon's
been,
breaking out today. Did you guys see
yeah,
that?
yeah, Amazon's breaking out today. So yeah, it's just been the same, just riding the wave, adjusting those stop losses and keeping them tight as you go, and then just again, it's like Coach Tyler said, trends be trending, so why not be trending with the trends?
You know, pretty strong across the board. Amazon obviously topping that 2,800 mark, clear breakout above the pivot. Microsoft's breaking out. Facebook's had a tremendous bounce back, by the way. They're almost back up to $240. The tech names, I mean, this has been where the strength is. Tyler, you're going to continue to approach tech the same way you have. Are these kind of your targets right now?
Well, I mean, what are you going to do? Try to short him, Tim? What are you, crazy? No, of course, yes. Look, if you like buying strength, then of course you're going to be focusing on these guys. And a lot of the stocks in the options report and stock report, we had a lot of tech stocks. We had to narrow them down because it would have been all tech. Mm-hmm. So yes, you're continuing to see really good setups here. And if it ain't broke, don't fix it.
Tyler, you said, what are you going to do? Short it? That'd be crazy. That made me want to think about what the short flow percentage was. I would like to meet the 0.85% of the population that trades this stock, that shorts this stock. I would like to, I just as a psychological experiment, I would like to dig into their mindset because they obviously like pain, right?
Oh, they're miserable.
There's probably better outlets in their life that would cause them a little bit less pain than shorting Amazon. Why would you ever short this company?
I wonder which of these has the highest short flow, by the way. Amazon's at 1%.
Let's play it. It can't be Amazon because I already gave you the short flow.
Okay.
I'm going to give it to you guys. Do not look, you cheaters.
I already looked at 3 of them, so I'm out then.
Okay. Then, higher short flow, Microsoft, Apple, or Amazon. Those 3, Microsoft, Apple, Amazon. Which one has the highest short flow? I want you guys to guess too. Highest short flow, Apple, Microsoft, or Amazon?
I'm gonna say Amazon.
What was the number you gave us earlier? Was that for Amazon?
No, it wasn't. I'm not. Don't cheat, Ty.
I'm not. I'm just getting a reference point here. These are 3 terrible choices. I'll go with Amazon too, actually.
I will also go Amazon.
Amazon, Cody.
I'll be a dissenter. Even though I kind of want to say Amazon, but I'll be a dissenter. I'll say Microsoft.
You're not the center on anything.
Dude, who shorts Microsoft?
I will go one step further and say Microsoft has the least short interest.
All right. It's close. It's close. Amazon's at 0.85%. Apple's at 0.80%. Microsoft's at 0.57%. I mean,
nobody shorts Microsoft.
Nobody shorts Microsoft.
I think the only reason people are, because Amazon is of the 3, I think people just see it as overvalued.
The highest PE.
Exactly.
I would still like to meet the 1% of people here that are short Amazon.
And I bet you their PDE ratio,
Oh
like religious type. Like they're just like all over the PDE ratio. They're like, it's so overvalued.
Stubborn, how many billions of dollars have these short interest traders lost on some of these Momo stocks as they've just run?
Dude, it's like, listen, you might not want to jump on the Fed's bandwagon, but don't fight the Fed. I mean, it really is that simple. I've been saying it for months now. Like, I don't short, and I definitely don't short in this market. It is really, really hard. Let's say you had a good short setup, and then there's Pfizer vaccine news, right? There's just so many things propping up this market artificially. It is tough being a bear.
Well, it is, but there's still bearish setups, and you still got to prepare for the bear. And you don't like shorting in general, though. I mean, that's just not you.
Mark, bro, it is July 1st. It is like 85 degrees outside, and you look like you're ready for winter. Is this just a mandatory look that we have to have, the hoodie?
Dude, it might be 85 degrees outside. It's like 66 in my house, dude.
Nice.
Got the AC, nice, it's nice and cool.
Room controlled temperatures. I like it. Guys, let's flash through the broad commodity and markets and whatnot. There's some more interesting individual company news. I want to get to that here pretty quickly. Let's take a look at crude oil if we can. A little doji on crude oil. I don't see anything here grabbing my attention from our analysis. But before, I did read a report that Iraqi exports did drop here in the month of June, Mark. I didn't get the exact number on that, but I know that was one of the sticking points for OPEC plus. Mark, current state of oil in your mind?
Well, I mean,
Give it to us.
Iraq has been a notorious cheater on the agreements. So if it actually shows that their exports are coming down, that's like that one-day news bump, right? Oh, they're not cheating as much anymore. So that's all that is.
Mm-hmm. Technically there, Tyler, how do you unpack that chart? Momentum changes, pivot changes. We're now kind of rolling in here. We've analyzed this daily and it's just kind of stuck right there at 40. What do you see in that chart technically?
A decrease in momentum is inevitable when the thing goes straight up, right? So when you look at this from $10, $6 up to 40, the only way, it's like, how are you going to maintain that momentum? It's like an unfair benchmark to be able to meet. So I think it's inevitable that it had to slow down. We talked about this before. It's not ironic. It's not illogical that it slowed down into a gap fill from the March 6th gap there. So I think it's healthy. When it digests a big gain like this and you get some higher support levels, some higher swing lows, in the long run, it actually creates a more sustainable trend. I think if anything, you got to be impressed that it hasn't even broken the 20-day moving average yet, right? So you can't be mad at the thing for taking a little bit of a breather here until it breaks the support pivot. Tim, I think that I view this as constructive.
You got this as a cup and handle right now, Ty?
Yeah. Yeah, and that type of pattern is just digesting gains, consolidating, and building a better setup for a new trade. Did you want to buy this when it first hit $40 in the middle of June? No, it was extended. Now you've got better setups.
Mm-hmm. By the way, huge draw in inventories today. 7 million barrels actually came in drawing down. So supply did come down a little bit, supporting the fundamental side of that. Let's talk gold here, Matt. Actually, very important, chart in my opinion. We did bang that 1800 level. Now you got a red candle for the first time in a few days, at least, something substantial. Still above that, riding the lightning, very, very bullish. Matt, how do you read the price action up there?
Positive economic data, in the short term, a little bit of profit taking on gold in the short term. That's nothing new to the market, right? Market's up, positive economic data, gold, takes it on the chin a little bit. I'm not reading too much into this. I said this on Twitter last night. There's not one thing in the market I'm confident in more long-term than gold. There just isn't. One thing I love about gold, I absolutely love about gold, is it's not Amazon, it's not Google, it's not Facebook, it's none of that. It's not a stock. It is a slow moving commodity, a very slow moving commodity. And then in this environment, all of a sudden one day you wake up and it's pinging at 2,200, right? So that's why I approach this from an investment perspective. That's why I approach it analyzing it from a position perspective. I look at it from a fundamental and economic and behavioral and a hedging perspective. And I absolutely love gold. I love it, on the breakout of 1760. I've loved it for the last 2.5 years. And there's absolutely nothing in the economic data, the fundamental data, what the central banks are doing that will take me off what my projection is.
Mm-hmm. Tyler, you wrote an option theory blog about playing gold as a bull call spread. I really enjoyed that. I thought it was a very, very good, well done and well written blog. It was kind of, from a conversation we were having here on the halftime report. And so you ended up taking it into the blog. Mark, you actually, I think you have a bull call spread on gold, don't you?
I do.
And
the party.
Just for curiosity, I haven't asked you this yet. How much time did you get when you got your options so that you could let this play out?
I bought January leaps.
So you've got the Januaries. A lot of times, more time when you're buying options, even in a spread, gives you the patience to be able to not have to worry about this day by day, because gold's not a swing trading product. It's more position trading.
Yeah, and everyone should have rules. This is one of those things. When I'm doing a swing trade, I'll usually buy about 60 days on options, right? So enough time where I'm not like where my, I have time, but I'm not paying that extra premium. But when I do a position trades, which gold definitely is, I'm not like short-term oscillations in gold. I'm not doing anything to that trade, right? So, I want a lot of time for that to play out.
Emily, how are you approaching gold right now? I know this is one of your favorite products. You love the shiny metal. It's been on your watch list. You trade it all the time, just like any good Team Tackle member. You've got gold in your radars. How are you approaching gold right now?
Same as everybody else, just cash flowing on gold. Obviously, we all own the physical metals, but in terms of the paper assets, it's just I've got some calendars going on gold right now, and just cash flowing on gold. Is really not much to do other than just cash flow.
Yeah, what a wonderful product. Ding that 1800 level a little bit faster. Matt, in our prediction podcast earlier in the year, 1800, I think, was like where you and I had targets on gold. And we're there here at the first day of July to start the third quarter. It's going to be an interesting back year for gold.
And mind you, remember what that analysis was predicated on. That analysis was predicated on the central bank reversing course on the balance sheet, right? And in September of last year, when the central bank reversed course and started increasing the balance sheet instead of decreasing the balance sheet with their repo actions, their quantitative easing actions, their dollar swaps, and so on and so forth, that was really kind of the analysis, was the Fed was going more dovish. That was before a worldwide pandemic where it cost the global economy trillions and trillions and trillions of dollars. That was before the fiscal government started putting out their fiscal policy to the tune of trillions and trillions of dollars. That was before the central bank decided to go from 4 trillion to 7.5 trillion in a 3-month stretch. So, that was before all of that. I'm more convinced now than perhaps I've ever been. And I've been a gold guy for a very long time, but I'm more convinced today than I've ever been that everybody should own gold. It is the number one hedge against the nonsense and the insanity we're seeing out of the central banks around the world. There has never in the history of mankind, and I'm not saying this just to put it out there, there has never in the history of mankind been an environment where every central bank has went more dovish in a shorter time frame than what we've seen in the last 3 months. Never at one point. They're to the point where they're risking fiat currencies in general long term. I've never been more convinced on gold ownership. It is absolutely needed. You should own the physical. You should own the paper. You should cash flow in the paper, compound in the physical. However you want to do it from an efficiency perspective, gold should absolutely be owned by everybody.
Yeah, man, interesting. For this weekend, when I was doing like some class over the weekend, for the first time ever, I jumped on board. I was like, is there room on the you absolutely should own physical gold and silver bandwagon? Because I'm the last one to tackle trading on board of that, because I'm generally this guy that's like, listen, nothing ever is going to go wrong long term, right? Order stability will always be maintained. I can't say that with a certainty for the first time ever. And so I was like, I ask you guys, is there room on owning physical silver and gold?
There's room, Mark.
Dude, there's room in the pool. There's room.
I'd like to jump on board, because for the first time ever, I mean, you see sovereign risk for the first time, in my opinion, for me, because there's always been the theoretical, right, that this spins out of control. For the first time ever, I see it too. Like, and actually, I'm like, shit.
I'm telling you right now, Mark, I'm telling you right now, there will be currencies that literally cease to exist coming out of the back end of whenever that is, 5-10 years from now, 3-4, whatever it is. And I'm not talking dollars. I'm not talking the US dollar. But I'm telling you, there are emerging market currencies that will cease to exist given what those central banks do. They do not have the advantage the U.S. does.
And I still don't think it will happen, because, I mean, that's just my nature. But when I go through probability and scenarios, I'm like, the fact that it is in the realm of possibility, I can't allow my family to be put in a position where I was wrong on this one. Still don't think it was going to happen, but the fact that the probability is higher than it's ever been, whatever it is, you can't put your family in that situation to have a fiat currency collapse and not have some stability to protect your family.
And I'm going to tell a story.
and then tell your story, Tim, but take it outside that, Mark. I could be completely wrong on my analysis long-term on the fiat currency system. I could be completely wrong, but yet I'm still right because of the inflationary protection mechanism.
Yeah, I mean, it's hit the point of owning it in the actual having it in your personal vault. It's for me, it's become the no-brainer, which I'm glad there's room on the bandwagon. I'd like to hop on board.
Well, and let me just tell you a little bit about the momentum of gold recently. The stock market had its best market since when? The last quarter, guys? Since the fourth quarter of 01, right? Literally, or you can date back to really the fourth quarter of 87. Dow Jones went up 17%, S&P 24%, NASDAQ 28%, Russell 2000 17%. Just had an amazing quarter for the entire second quarter from a price perspective. Well, let's look at these boring little commodities, right? IAU, in that same quarter, your EDX, the gold miners in that same quarter, the gold miners are not up 40%, they're up 70% in that same quarter. Gold itself, the boring little precious metal commodity in the last quarter, it's up more than most of the major market indexes are. Consolidating for 2 months, breaks out. That price is significant. When you're looking at it, it's across the board. Gold outperformed and gold miners outperformed even in almost every other thing outside of growth in the market over the last 3 months.
And there have been several questions in the chat I don't want to skip. Matt, you brought up that IAU chart. Somebody asked, can you play, Paul Liu did, you play IAU versus GLD? It does have options. It's got liquidity there. I don't see any reason why you can't. I usually play GLD. Yeah.
I usually GLD, but some of these cheaper ETFs usually can do a little bit more cash flow on them. So I certainly understand that. IAU, when you look at the trend of IAU compared to GLD, which is the primary ETF that most people trade, both of them are fairly similar in terms of a price perspective. So absolutely, Paul, IAU can be a substitute for GLD, especially in smaller portfolios where you're looking to, not just take an equity position, but you're looking to take an equity position that you can, maybe even cash flow off of, right? So if you go here to the trade tab on IAU, you got weekly options. If you go to that 16-day contract and, we're looking at the volume and the open interest on the at-the-money strike price, you have 4,000 contracts on the open interest. That is a ton of open interest on those contracts. When you're looking at GLD here, Paul, GLD coming to that at-the-money strike price on GLD, you have obviously more liquidity because this is the ETF that most investors and traders, look for. But if you're looking to do some cash flow because you need 100 shares or 200 shares or whatever it is, IAU is certainly a substitute for that. You could probably get a little bit more cash flow on that covered call as well, a little bit more cheaper price. GDX is not a one-to-one correlation with gold. Obviously it's kind of running in the same direction, but it's not a one-to-one correlation. GDX, people like GDX because you're now talking about the miners. You got gold miners, copper miners, silver miners, you got all the miners in there. And so because of the miners, you have a little bit more of a different form of analysis with fundamentals and behaviorals and, kind of those, it's kind of like the difference between analyzing oil and analyzing ExxonMobil, right? They're going to run to a similar perspective, but they're not going to do it one-to-one. GDX, IAU are probably a little bit better if you're looking at covered calls for smaller portfolios. GLD is perfectly fine though.
Yeah, I love that.
The only problem with IAU is it's tough to sell naked puts because just the way it's structured, you're almost never getting a credit down below. But IAU is if you just like adding and cost averaging down by adding shares, it's a lot easier to do it with IAU. So there's plus and negatives to it, but I love it. If you wanted to like add 100 shares here and then say if it drops $1, I'm going to add 100 more. It's a great vehicle for that.
Yeah, it's Mark, wonderful point there. GLD allows you a little bit more flexibility from a strategy selection. No doubt. You have more liquidity on GLD. but IAU, you certainly can do covered calls and dollar cost average as well.
By the way, the dollar did bump its head up here. We were talking about gold relative to currencies and whatnot. Just quick peek of the dollar there, Matt. Cody, obviously going to be some interesting patterns in the Forex report over the weekend. It did hit resistance, little pivot candle here. We'll see if that actually confirms and turns down. Still got those moving averages under it, but there's nothing else there I want to analyze on that. I want to move into individual companies and stocks here today, and because there are some interesting news headlines. Couple things right now I want to make sure that we talk about, and whenever we transition into stock talk here, there's a couple of checklist items I go through on my side. Number one is we do have a webinar tonight, and I'm excited about the webinar. Matt, you're going to be teaching. We talked about it earlier, 7 p.m. Eastern here tonight. If you have never seen one of our Wednesday night specials, they're different than our halftime show. Halftime show, we break down the charts, the news, the information, we give insight, analysis, a little bit faster pace in some ways. Matt, tonight you're going into education. You're going to be teaching concepts on support and resistance here, 7 o'clock on our YouTube channel. Looking forward to that. If you're out there watching the show right now, somebody do this for me. If you're Team Tackle, just type it in the chat. Tonight at 7 p.m. Eastern, webinar with Matt, so that we're all aware. And Emily, you're going to be there. You're going to come in and hang out with us. Is that right?
Of course, I can't. I have to be there for Marty the Elephant. That's the return of Marty. I have to be there.
Yeah, I notice you pop in on these Wednesday night ones quite often, actually. You kind of like hanging out with Noah. I've seen you in there quite a bit. What do you like about that new webinar that we've been doing the last couple months?
Well, I like it because it ties into the people that are out there on YouTube that are trying to find a community that can teach them, how to trade and give them proper education in trade management, as opposed to just kind of, trying to figure it out on their own. So I like it because it's a simple webinar. People can just hop in there. It's free. It's on YouTube, and we can just get in there and have fun. So I just like to be there, kind of like to welcome, all the people that are out there that are brand new, and just kind of, have them see what the community is all about. So it's just fun to be out there and hang out with folks.
And I really do believe this. If you're out there and you're a veteran, you know our stuff, you know our channel, you're a part of our community. Guys, this is a great way to introduce one of your friends to trading, because it's a YouTube show. It's once a week. It's more content. The markets aren't open. We're diving into education and simple, important concepts like support and resistance. If you have a friend you've always wanted to invite to a trading webinar, or you think they might get value out of learning about the markets, I think tonight would be a great opportunity to do that. Send them a link to our YouTube channel and just let them know, or go to the events page and grab that link and send it to them as well. Very much looking forward to it. Guy, go ahead, Matt.
One thing I do love about the Wednesday show is in the halftime report, Tim, as you indicated, we're here to analyze, break down the news, break down the markets, make sure our community is understanding what is happening out there in the financial world. Because a lot of times when you're breaking it down just in traditional news media, it's really, really hard to trust that type of analysis. So, we're here to really kind of break down and give you the analysis you need to navigate the market. But in those Wednesday shows, we get to do what we were born to do, and that's teach. That's the value that all of us coaches at Tackle Trading really, really believe in, is that, yeah, we love analyzing, we love trading. I mean, in those scouting reports, we geek out just looking at technical setups. We just geek out. I mean, I love it when like Tyler will pull up a setup and be like, and all of a sudden you hear like 4 coaches and their initial response is just, ooh, oh, right. It's just, it's that natural response. And it's like, yeah, you guys like that one. So we love doing that. But what we love the most is teaching people how to do the same thing. That is our value at Tackle Trading. And so I'm looking forward to doing a little bit of a, and I'm going to keep it high level. I'm going to keep it basic. I'm going to keep it, from an educational perspective, but it's just, I'm looking forward to really just geeking out on teaching people the concepts of support and resistance, momentum, how candlestick analysis can help us understand that momentum, where to prepare, where these levels of support and resistance can form. So then when we see them start to form on the chart, because support and resistance is only determined by the market itself, we're prepared to take action at those levels. And so I'm excited about it. We're going to have some fun tonight.
It's going to be a lot of fun. There's no doubt about it. Some companies I want to talk about. I actually want to start with Yum, if you can hear YUM. Yum Brands, they own KFC, Pizza Hut, Taco Bell, and the Habit Burger Grill. I think they own some other things as well. Obviously, Pizza Hut is one of those things that is an iconic American institution. As a little kid, I remember going into a Pizza Hut and get the pizza buffet in Price, Utah after ball games and playing Pac-Man video games and all kinds of stuff. Now, Yum doesn't own these 1,200 properties because they're actually through one of their partners, but NPC was the company that had 1,200 Pizza Huts, Matt, and they had to file bankruptcy here. It's interesting. I think we're going to see many stories like that. We've seen it with Chesapeake, with Hertz. NPC, I don't believe is publicly traded. Mark, you can correct me if not. But a little bit of a sad news story for me. I don't think it actually affects Yum's stock that much because they still own the brand and they actually get paid from the licenses. But we're going to keep seeing this stuff, guys, and whatnot. Matt, Pizza Hut, does that give you any bit of the feels knowing that some of them are going under?
It does. It does. I mean, I remember as a child, after a nice little baseball game, our father taking us to the pizza shop there in Price, Utah, and you say it was filthy. I'm like, no, that was delicious pizza back in the day.
I'm not saying it's not delicious. I'm just saying a pizza buffet with those glass windshields. I guarantee there's cesspools of disease.
Don't you do this cancel culture nonsense where you're canceling Pizza Hut based on the pandemic response of 2020. 1987 was wonderful pizza, and I wasn't cared about a pandemic in 1987. So, but you know what? It does lead me to think just one thing from just an analysis perspective. Companies that were struggling prior to COVID-19 that have been absolutely butchered post COVID-19 is not an area of the market I would look to bottom feed. Yeah. It's just not. If they were already struggling, like we talked about Simon Property Group yesterday, Tim, and we were looking at it from, there was some positive news coming out on the commercial property space yesterday. And you asked Mark, you said, Mark, do you have any interest? I mean, you're seeing a support bounce at $60. It's forming a higher low. Are you interested in bottom feeding here? And Mark was like, no, I have zero interest. And what was his analysis? It was like, well, it was a week before this happened. Why would I look to buy something that was weak before this happened? And now it's weak after it's happened. So where's the analysis? I'm not just going to bottom feed just to bottom feed, right? I mean, you buy 100 shares at 60 and it goes down to 40, you're going to lose 33% of your money. The same way if you bought it at 100 and it goes down to 70. So, no, so that just leads me to just, again, just reevaluate on those distressed areas of the market. What were they before COVID-19? Were they already like the airlines? The airlines were struggling a little bit pre-COVID-19, coming out of post-COVID-19. They're going to have a long haul to kind of go through. Same thing with Simon Property Group, Pizza Hut, many other companies that were mainstays of companies we went to as a child. You know what? JCPenney's and Sears, no longer. Pizza Hut, no longer. So if companies were struggling coming into this situation, struggling coming out of it, no, don't look to bottom feed. I saw somebody in the chat say, hey, is anybody investing in what was it, Cinemark? Mm-hmm. I can't remember if it was Cinemark or AMC. No, it was AMC. And I said, no, they were struggling before this. You think it's just going to just come back around? No. So, bottom feeding, yeah, there's some analysis there, no doubt about that. But as a company that was struggling coming into it, I really have no interest in. But that's just the one thing that Pizza Hut really kind of brought to my mind.
Mm-hmm. Mark, when a licensee, like this NPC company loses 1,200 Pizza Hut locations, how does it affect the underlying company like Yum Brands?
Well, as long as they're paying their franchise fee. I mean, this is the irony of, there's so many ironic things to 2020. Like the licensee owned a bunch of Pizza Hut and owned a bunch of Wendy's, right? Well, Wendy's is up almost 1% today, even though the company that declared bankruptcy owned 400 Wendy's, because the bankruptcy actually puts them in a good position to keep paying their license fees, which is how Wendy's makes its money. Now, whoever sold and whoever's on debt for the banks is one of the reasons the banks are struggling, right? Because whoever lent that money, well, they're on the hook for it. Mm-hmm. But the parent company who's getting the license fees, they're actually ironically in a better shape to pay those license fee post bankruptcy. So just sucks if you're the bank, right?
Yeah, but then the bank's got the backstop of the Federal Reserve willing to throw.
Yeah, I
the
know,
money
right?
in
It's just a
time.
nice
So
little
wonderful
circle.
economic model we live in here in 2020. Next company here I want to talk about is Pfizer, if we can. Positive vaccine trial news here. And Mark, this was a company actually that you've been approaching with different trading strategies and whatnot. You even boomerang this one. You were complaining about making money today, and everybody on this call, even Tyler said, Tyler, you can tell him again. You know, Mark was complaining about making money. What'd you tell him?
Oh, what was the version? Something.
Shut up, shut up, and
No.
stop whining.
Yeah, boo-hoo, cry me a
Throw it out to
river.
the halftime crew.
Yeah.
Okay. So halftime crew. What would you tell Coach Mark, who was complaining about getting Pfizer put to him, writing a covered call, getting it taken from him, and making money on both sides of the equation? He was like in pre-production show, he was complaining about making money. And it's like, oh, come on.
Not just complaining, sulking. Like he's really upset about this. This is not faux, rage here. He
Like
literally.
we got to give him a lot of love from the halftime crew for complaining about making money.
Mark,
That's all I've
explain.
done for the last 2 months. Hello, I keep having all my naked puts expire. I finally get put something. I write a call, and I'm like, and I wanted Pfizer to do the slow climb up. Of course, we get vaccine news, gap up. I'm going to lose my shares. Hey, I guess there's worse things.
Well, and the worst thing about this, you complaining, yeah, first world problems, no doubt, Marquis. but the worst thing about it is you were boomerang trading this. In the boomerang system, it is designed for you to get put to it. It is designed for you to get taken away so you can write another naked put. And so Mark gets everything he wants, but he's like, oh, I wanted a little bit more time. I want get out of here with that. You were making money. What's going on?
Dude, it's like he's a baseball player. He sees a pitcher that's floating the ball over the middle. He's waiting for his turn. He gets up there in the box, and then they like intentionally walk him or something. Like they just give him a free pass and say,
like,
"Here you go."
Ultimate.
I don't get a play. I don't get a play. Right?
The Pfizer setup was just so nice. It's like sometimes you get deals, right? So you had a little gap down on BS news about a month ago. And then Pfizer broke support on that big Thursday where the whole market sold off. And then it created a little downtrend. I mean, Pfizer, same company, right? Same fundamentals, same awesomeness. But you just got a really nice scenario where you got Pfizer a lot cheaper. In an uptrending market where you get a blue chip with nothing wrong with it, cheaper. I mean, you get these deals every once in a while, but the gap up. Yeah. I could have made more money.
Swin, I love his comment here, Mark. I got to read it to you. He says, Mark can go more delta if he like. He must have been a tight poker player.
Well, you don't make a living in poker without being a tight poker player. That's right. So
I'm just saying, if you ever play poker with Tim bluffs every other hand. Whenever you play poker with Mark, if he pushes his chips into the middle, you got to be a little hesitant.
You better be ready. Yeah.
But there is that, I had so many people over the years that they look at me and they're like, there's a little bit of devil in you, Mark. You might be bluffing.
Oh no, your attitude.
A little bit. You got to have a little bit of devil in you, or else they'll always know that you're playing it straight.
What was the news on Pfizer today, by the way? Because I read that they had some phase trial actually come in pretty positive. I didn't get the details on it though, Mark. I just saw the headline.
A little limited trial of 24 people with preliminary reasonable results. We've seen this type of vaccine news several times or therapeutic treatment. Think remdesivir. Limited trial, not the end all be all. Positive signs. It's been a while. It's been a few weeks since we had a vaccine thing. It's been a few weeks.
Next, I want to go on.
Yeah, Tim, I just want to reiterate what Mark said real quick. It was a very, very small data sample. We have seen it before, but it was about antibodies improving or neutralizing after the vaccine. So it was positive data.
Airlines next here, UAL, if we can, some positive news out of them in some ways. They said they're going to add 25,000 flights during the month of August, saying a little bit of the demand is picking up. Do you guys have interest in the airlines down here? I still, have some targets on Alaska Airlines. I think there's better ones than UAL personally, but all of them kind of move here together. I'm going to start with Tyler. Tyler, from a chart perspective, you have that bottoming pattern. We saw that huge ramp late May, early June, and now these charts have kind of gotten funky here the last 2-3 weeks. What are you seeing in airlines, and do you have any interest in them, Tyler?
I did like the first dip. All right. The first dip after an increased momentum breakout, always interested. So that pullback on June 11th, interested. Since then, nope. I don't like how they're selling the rallies. You know, sellers are getting more aggressive every time the thing goes up. And today you're potentially making another lower swing high. I got way too many better candidates.
Yeah. In fact, presumably good news here today, Matt, that the opening UAL was up, but it banged its head right there on a moving average. It's now got a red candle, not a great looking candle, kind of consolidation in there.
It's interesting. I agree with Tyler. I was really interested in the first pullback on the momentum play. Not nearly as interested in right now from a technical perspective. And I think that one data point we're seeing here today, where you saw the news headline come out on United, and it's like, oh man, they're adding all those flights, they're getting back up and running, and you're like, yeah, that's fantastic. But then when you actually read the article and you realize there's still 40% of capacity that they were even last year, and that's after the increase in August, and you're like, oh, that's still really, really, really nasty. So yeah, I think this to me is a little bit of a stay away right now until we see a little bit more data.
Two big companies with earnings actually in the last day or so. FedEx, number one. I'm going to start here and get you guys to take. Matt, did you get a chance to look at this report, by the way?
I did. It was not nearly as good as what the market response was. FedEx is on pace for one of its best days it's ever had, by the way. Tesla goes up 16% on Elon waking up in the morning and having a cup of coffee. That's par for the course. FedEx going up, 16%. It's up 12% on the day so far after a little bit of profit taking. That's a major move for FedEx. I'll break this, actually I'll have Tyler break down the gap range, the candle, the type of breakout that had, but the numbers came in at the EPS numbers came in at really, really, really positive. And that's really what justified the move to the upside here on FedEx. They came in at $2.53 on the actual number. Their expectation was, I believe, $1.42. So really, really, really good beat on the actual earnings per share numbers. Revenue also beat at 17.4 billion versus the expectation of 16.3 billion. And a number that is very important is revenue year over year in this environment. And yes, they did decline by 2.5% revenue year over year, but in comparison to where they probably were, that was taken as a positive as well. And so a really good beat on earnings per shares, a pretty decent beat on overall revenues, top and bottom line beat here. Revenue 2.5% decrease year over year, nothing to put your hat on and whatnot, but still a pretty positive number given what it could have been. I like the economic report, the earnings report we saw on FedEx. Does it justify the breakout? Nah, I don't know. I think we're premature on that. But Tyler, how would you categorize this gap range? And Tyler, very quickly, when you're talking to traders about types of gaps and analyzing the gaps, how do you approach something along if FedEx was the example you were using to teach a student about gaps?
Yeah, great question. The first thing I would say is when a stock gaps up, you have to look at what's to the left of the current price. Is it gapping into a resistance level? Is it gapping into uncharted territory? I want to have an idea of if we're gapping into overhead supply, we're gapping into resistance. And in this case, the challenge with FedEx is it was gapping into a resistance area. And there's a couple ways you can try to trade a gap. There's breakaway gaps where it gaps and continues in the direction of the gap. Like they rewarded Facebook overnight, or I don't know why I keep saying Facebook, FedEx. They rewarded FedEx overnight with like a 13% gain. A breakaway gap would be everybody waking up the next morning and say, only 13%? That's not enough. This thing deserves to be up 15, 20%, and so it gaps up and they continue to chase it higher. That's a potential outcome, but it's not likely if it's gapping into resistance. Like you have to wait for them to clear that because you have all these people who are bag holders on FedEx finally getting a chance to unload the thing at 166, 167, whatever again. And you got to wait and see if they take that opportunity or if we have enough demand to blast through all of that overhead supply. So, I would have had FedEx on my radar knowing it was gapping up this morning, but that in and of itself is not good enough to place a trade. You've got to have a gap into an area where it's likely to follow through. And so far, the response at the open is telling you everything you need to know. It tried to go a little bit higher, but it failed. So I don't think this would have given you much of a reason to buy it today. They already priced in a ton of gain overnight. So most of the benefit was already baked in. Like you had to roll the dice into earnings to get today's gain. I don't know that I'd play for a gap fill. I mean, I guess you could, but I'd be waiting for the next setup.
I think there's probability on the gap fill, even though I don't think that there's necessarily a good trade there, but I do think if I'm looking at the chart and the candle and the price action you just described, and I love that breakdown there, Tyler and Matt, it went right into the resistance and then we've been fading all intraday. I would lean toward that thing coming back down, and maybe hitting that 150, the old pivot or something like that. But day traders would have sold this today, Tyler, don't you think? I mean, when those
that's what you've gotten confirmation. I mean, if they were waiting to take out the low of the day, we did. So if you're day trading it, you're certainly not buying it here, right? Yeah. It's a short or a pass.
Yeah. Oh. Next one on the earnings.
Quickly, Tim,
go Matt.
One thing, and understanding the difference between gaps are important. We should do a webinar on Wednesday coming up on understanding just what gaps are, because we see them quite a bit: common gaps, breakaway gaps, runaway gaps, exhaustion gaps, catastrophic gaps. We see different types of gaps. Some have a tendency to gap fill, some don't have a tendency to gap fill. But I think with just one additional point to Tyler's, and thank you for breaking that down, Tyler. But one additional point is reading the cash open following the gap. The gap is on the overnight, right? It's the investors making decisions. It's new traders making decisions on what the earnings numbers were. But that's what creates a gap, is the overnight supply and demand coming into the market following some type of report. Obviously in this example, it'd be an earnings report. But reading that cash open to me is so important to understanding what type of gap this is. We gapped up on FedEx right here into that 159 level. You initially tried to run, and where did you run? You initially ran right into the left of the chart, like Tyler indicated, and then you started locking in profit there. To me, if FedEx would have broke out of 165 and ran, you have momentum trading at that point. You have potential breakouts at that point. And so at that point, you could see this as more of a runaway gap or a breakaway gap. But because it gapped up into previous levels of resistance, and now we're seeing profit taking after the cash open, that really does lead to a conclusion of an exhaustion gap, which does have a tendency to gap fill. And so when you're talking about that gap, the beginnings of the gap, breakaway, runaway, or exhaustion, they're all very, very similar on the overnight action. They all gap up or they all gap down. But the difference between exhaustion and the runaway and the breakaway is what happens following the gap range on when the market is actually open. And when you have that profit taking, that's why initially, Tim, you and Tyler both initially said you have a probability of a gap fill because of what we were reading from a cash open, leading to the analysis being an exhaustion gap, which does have a probability factor to actually fill that gap.
Mm-hmm. Well, here's another gap, Matt. Take a peek at this one, STZ. I mean, that FedEx gap, that was on earnings. STZ also gapped up on earnings. A little bit different of a gap. It did come into some old pivot point, but it hasn't completely turned into a red candle. I mean, Constellation Brands, they had their earnings as well. And by the way, this is the maker of Corona beer, Emily. So if there was low expectations for a brand to do well in this quarter, and they had invested in some marijuana companies like Canopy Growth as well, but they had really depressed expectations. Matt, what were the numbers first, then any analysis on the chart?
Yeah, numbers came in positive, 2.3 EPS versus 2.03 on the expectation, 2.1 billion versus the expectation of 2 billion. Apparently, we as Americans are still drinking liquor here. 6.6% revenue decline year over year, nothing to be too concerned about in this environment. Obviously green candle, red candle, some people might microanalyze that. I don't. You had profit taking coming into 190. That was the old resistance pivot from a week and a half ago. I see this very, very similar. I expect a retest of the 200-day moving average.
Mm-hmm. When do you drink a Corona beer again? I guess if you're a beer drinker out there, do you test it? Is it bad juju, Emily, to be drinking Corona beer during the coronavirus lockdown?
Nope, not at all. In fact, once we're done with the halftime report, I'm gonna go get me a Corona.
Crack a Corona beer, is that right? They celebrate with that. Uh, yeah, Matt, these type of plays, obviously, during economic downturns, things like that, Constellation's the type of company in those SIN type index plays. Mark, I know you've had interest in these types of names over time. Do you have any interest in Constellation?
No, I'm looking at Budweiser.
You like
So,
Budweiser better?
well, I mean, it's cheap, beat up, blue chip. Fed's buying his bonds, so.
Makes sense. Makes sense. Makes sense. A couple more news stories for me. Beyond Meat won't get out of the news. You know, it's very interesting. And yeah, we'll have Tyler come up when we go to the option report stuff. That'd be a great idea. But Beyond Meat, they got a deal with Alibaba. So they lose a deal in Canada, they get a deal in China, they lose this, but then they get that. They drop one with Starbucks. This is a news driven just machine lately. It's making the chart almost untradeable. The initial reaction to the news was very, very positive, Matt, but it went up, and now we've given up almost 7% of the gains that it had early at the cash open. Not a great follow through on the chart if you're looking for some stability in Beyond Meat. Matt, how do you read that momentum change right here?
In what capacity? Because I mean, the momentum shift on a daily perspective or on a trend perspective?
The trend itself, you know, because you can feel it rolling, obviously. I mean, it wouldn't
Well,
hold that trend line, couldn't hold the moving averages.
well, that's fine, but the trend ended here.
Mhm.
That's when the trend ended. I mean, when you had this, bullish retracement right here coming into the old resistance level, and then you had the hold up here at resistance, followed by a double top. I mean, that's when the trend is over. So that's why this chart is so stinking ugly right now that you can't even touch it. You can't touch this from a trading perspective.
Yeah, I think I would probably take it off a short-term watch list. I still have long-term, ambitions around Beyond Meat. I think they can do very well if they can catch,
Yeah,
some good.
is there
Don't
anything
worry, you're
more
gonna get a chance to
frustrating
buy it
than
at 60.
these stocks,
So,
though, guys?
Say again, Matt. Mark was giving me a hard time here. He says I'll have a chance to buy it at 60. I can wait.
You may. But no, I mean, there's nothing more frustrating than trading charts that you can't get a clear picture on. Clean charts are
Yeah.
so vitally important. They're so vitally important. There's nothing clean about Beyond Meat right now.
Well, when a chart like that gets blown up, also, it might take weeks for it to stabilize or develop back into a pattern that you want to trade. And so it is frustrating. There's no question about it. But here's the beauty about charting and the markets. There's always a cleaner chart somewhere. You know, you don't have to get emotional about the companies you're watching just because they're ones you're interested in. Two more for me. Facebook first. Zuck, Matt, has done everything you thought he would in the last week. He's actually came out and said, we're going to meet with protest groups, the leadership, see what they want to say. We're going to listen. We're going to try to improve. And they're also open to being audited so that people can look and see how they're actually filtering information off of their platform on Facebook. I know Facebook's been all over our analysis here recently. They've been in the news a lot. I got to tell you, that chart looked like it was being blown up. Now you have three very, very strong green candles to start the week here. Tyler, I want you first here. How do you read that price action on Facebook?
Impressive. It goes back to what did you want to see in the market this week after Friday's nasty close? You wanted to see a nice rebound at support. I think they're just three really aggressive bullish candlesticks. I don't have anything bad to say, Tim. I mean, what more could you have wanted after a nasty down bar like that?
It felt like it was going to be blown up on that chart, and now you have this big rally here, Matt. I mean, if you get a breakout technician, I would not fault somebody for buying a breakout up there.
I would have faulted them, but at this point, I think there's much, much, much better and cleaner setups on breakouts.
Yeah.
I mean, don't get me wrong. I mean, the breakout would be strong, but at this point, I mean, Facebook would have to run from 210 to the breakout channel at 245 with a potential target at a minimum of 260 by 270 just to justify it. And I just don't think you could. I don't think you can justify that level of target to take on the risk on the breakout here. Mm-hmm. For me, Facebook's tradable again if we hit resistance somewhere around 240, 245, and then we high base. Give me 4, 5, 6 days of consolidation, let that momentum settle down, and then approach the breakout again. But this is, I mean, this is standard for me. I don't trade breakouts after they've ran a marathon to go into the breakout. I just never do. It will never happen on my watch.
Swin asked an interesting question. Does Zuck have fanboys as well?
No, Zuck has haters.
Swin, I've not met him. I gotta tell you, I'm not meeting anybody that's stumping for old Zuckerberg here.
Swin. Here's how I know. Whenever I would used to travel and teach, when I would rip on a company, you could always tell what companies have fanboys, right? And if I would ever say anything negative about Tesla, oh goodness gracious, it was on.
It pushed back.
It was on. And sometimes I would honestly just say something negative about like Apple, just to test the waters a little bit, or Microsoft, or any of those stocks, and you would have people that felt like, honestly, it was easier to tell them their newborn baby was ugly than telling them their Apple stock was not amazing. Like literally, you can tell. But anytime I've ever had something negative to say about Facebook, even people who like using Facebook, they're like, yeah, Zuck's an ass. Yeah, we get it.
Mm-hmm. By the way, Hero, I'm on board. Hero, I'm on board. I'm on board. I listen, I've had a 3-month stretch here with Tesla, slowly getting back on board on the Elon Musk train. I said it on Twitter yesterday, Hero. I said, the only CEO in America that can drive their stock 18% by breathing is Elon Musk. That's it. That's the list. There's no other list. Yeah. Ahmad, we'll see you tonight, friends, 7:00, and we'll check that email. Make sure you get set up with your pro trial for sure. And welcome out to Team Tackle. I see you in the chat quite often here, Ahmad. You keep coming back every day and be a part of our community. You'll keep learning. There's no doubt about it. And Hero has been pushing it back on us, Mark, for a long time. Anytime we're critical about Tesla, you got to give it to Hero. Hero's been right about Tesla.
Hero has been right on Tesla. He's been on that freight train longer than I was before. I believe Hero embraced Elon before.
Early adopter, for sure. Early adopter
of all things. And what I love about Hero, and I do love Hero, is the fact that I have said a lot of negative things about Elon ever since he got high that one day on August 8th and faked the 420 Elon tweet that he had a buyer. But Hero, the whole time, you're wrong, Matt. You're wrong, Matt. I might be wrong, but I don't care. I'm right. Nope, Matt, you're wrong. You're wrong. And Hero, I was wrong. I'm back on the freight train. I'm back on Elon's back. Yeah, he's insane. I'm insane. We can be insane together. I'm back, Hero. I'm back with you. I'm back with Elon. The scorned significant other, me, in this environment. I'm not scorned any longer, Hero. I'm on board.
Mm-hmm. Yeah. Netflix is the last one.
Running Hero is what I'm really doing.
That's right. Tyler, by the way, if you're ready, I'm going to have you do screen share here in just like 2 seconds. You can run through some of the option report picks, some stuff we were talking about earlier in the production. Last one for me here, Matt, is Netflix. And I think you're going to see stories like this over and over again. I believe corporations are going to take the lead on some of these social movements. They hired a new chief marketing officer, a black guy named Bozomo St. John. The company actually made that PR announcement. There's been a lack of representation of minority groups in CEO positions, C-suite positions. I think you're going to see companies step up and actually start to take action on that. Netflix did it here today. Big announcement. Not only that, they vowed to commit another $100 million. And I've seen this out of corporations to support Black communities right now and those kind of things. Social trends, it's going to be a storyline for the next 10 years, guys, if not longer. There's no question about it. Environmental, social, governance type issues. Netflix taking a leadership position here, and the stock is breaking out. One of the first trades you ever took, Emily, I remember when I was mentoring you, was a Netflix long call trade you had. And, we had to talk a little bit about Delta and Theta at that time in an educational moment. Do you still trade Netflix, Emily?
Of course I do. You know that.
Are you in right now?
Of course I am.
Of course you are. I knew it is the most predictable thing in my life, Matt. Netflix running, Emily's in. I know it because this has been on your watch list since you started.
I actually feel bad because I have a butterfly trade on it right now, and I should have just gone straight, just straight up and just play the directional. But I'm not complaining. Like Mark, I'll take my.
Wait a second. Whoa. I
What?
heard a complaint there.
I said I'm not complaining
was,
like Mark. I'll take my profits. I'm
I get it,
done.
I get it, but it was not as, it was far more subtle than Mark. I cannot believe I only made this much money. Blah, 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 blah. It was far more subtle, but when a veteran option trader, like, yeah, I probably just should have went aggressive Delta versus
Yeah.
Y, you know,
Yeah,
that's
I know.
complaining. That's like, no, take your money and run.
I'll take it. I'll take it.
Yeah.
Dude,
You gotta love the breakout here.
Are you talking like the Geno strategy, the directional butterfly things, or did you do inverted? Like
Yeah, it was a butterfly. I actually had it. I've had it off for a couple of weeks. I almost took it off last Friday when the market was kind of going down, but I kind of stayed on board with it, so it's paying off today.
nice trade. Yeah, don't complain about profits. That might be the message of the day, Tyler. We don't listen to people complaining about profitable trading. So
her complaining was so subtle, and you guys are piling on. This is hilarious.
we know her.
Yeah, we knew what she was doing. We knew.
All right, guys. We're gonna
very quickly though. The news on Netflix, obviously a lot of momentum. The break of 450, the rise that you're having here today. The weekly chart looking really, really, really strong on Netflix. Netflix had news today though. It got the double hammer. They did. They got upgrades twice at the banks here today.
Oh, did they? I didn't see the upgrades.
Yeah, they got 2 buy upgrades. And also Bank of America Merrill Lynch added Netflix to its US 1 list, which is the top quality investment list out of Bank of America. So it did have 2 upgrades here today at the institutional level.
Yeah, that's a double whammy, triple whammy here. Good news, upgrades, all that kind of stuff. And then the technical whammy here, Tyler, nice little pivot confirmation.
Are we going to see a no sell day on Netflix? Is this a no sell day?
Yeah, it might be.
Like, did we ban selling on Netflix? We did. We banned
today.
Yep.
Yeah, for today at least. Tyler, I'm going to give you the last section here, and then get everybody's final thoughts though. But you had an interesting perspective. You and I were talking earlier, just before we went live on the show. You did the option report. You do the option report most weekends, by the way, whenever you're available, and we love it. How much time, effort, and energy you put into that. And if you're a pro member of Tackle Trading, you already know Tyler and all that kind of stuff. And I think we've got to give you hosting. Hold on one second, Tyler. I'll make you the host.
Yep.
Actually, I don't have the ability to do that, Ty.
Give me a second. I will take care of that one.
Zoom has changed some of their security stuff, is what it is. But Tyler, talk about that for a minute, because we have bull list, we have bear list. You put a lot of time into developing the option report as a team. We actually get together on Fridays to produce those lists, and kind of explain how you put everything together with all that.
Yeah. So once upon a time, Tim, I had a golden retriever. And I had a buddy of mine that was a dog trainer, and he trained dogs for AKC field trials and hunt tests, and call them bird dogs. So hunters are lazy, and when they go shoot a bird, they don't want to have to go get it themselves. Like, heaven forbid, they got to get out of their perch. So they send the puppy to go do it, right? Mm-hmm. And maybe it's because they're lazy, but more likely it's because they're smart, and it lets the dogs live up to their potential. So it's fascinating, right? Bird dogs. So look, as a trader, you only have so much time, and wouldn't it be nice if you could just be that hunter and you could say, look, I don't want to go find stuff. I got these wicked smart dogs that have been well trained. They got years of experience. They love to go find these birds. I'll just send them after, right? And then they can come back and give me some trade ideas. So if you want to think about the options report, the stock report, the scouting reports, really what they are is you taking advantage of bird dogs. Mark's a bird dog. I'm a bird dog. Tim's a bird dog. Matt's a bird dog. And we go out and we try to find the best setups every weekend. And we counsel about it. So what do? I go through my watch lists, I run my scans, and I show up on Friday and I say, hey, these are the stocks that I think have the best setups. And Mark does the same, and Tim does the same, and Matt and all the coaches do the same. And then we narrow down the list to a handful of bulls and bears, and we put them out. And as part of putting out the video, whoever's in charge of crafting the report, they do a little write-up and they do a video, and these are in depth. I mean, I think mine last week was like 35 minutes. So it's it's a pretty in-depth analysis, and we effectively go through each setup, or whichever setup stand out to us, and I tend to just provide examples of how you might analyze the options, how you might analyze the volatility, what types of strategies make sense. And really, Tim, just try to equip the viewer with the right information to be able to make an educated decision as to whether they want to play these setups.
Yeah. I got to tell you, Tyler, even as a veteran, I use your bird dogging, stuff quite often. Everybody's, I mean, we all do it. I start with the options, the stock reports before I do any individual scanning on a daily basis, because I know those are already vetted and pre-approved watch list. And I do look at the Bulls team and the Bears team. And I think it's very important for people out there to understand you got to have a list of both, just in case, market conditions are what they are. I mean, you take this week, 3 green candles here, Clorox, Okta, Splunk, some of these candidates here, Tyler. Just take a look at Splunk, for example. Splunk had a very nice week. It's playing very bullish here today. And you can kind of just go in there and make your picks on what you want. Billy's breakout was beautiful, all that kind of stuff. Now, traders out there need to learn how to trade them. It's their job to learn how to put a target, a stop, an entry, and position size properly. But we've bird dogged for them. And then those lists just give you the ability to kind of break those things down one at a time, right?
Yeah, and that's the thing is we all may have traded Billy, but we do it different ways. There's not one right way to trade a particular pattern, but it puts it on your radar because there are thousands of stocks, and it's intimidating at first because it feels like a full-time job to go through and find a setup. So yeah, it's nice to have a curated list. And not every stock triggers, a lot of them, like this week, the bear list, hardly any of these triggered because the market didn't break support. It held. But it at least gives you a pared down list. So yeah, on the bull report, like Okta today's breaking out, right? This was a nice little cup and handle type pattern. Has a nice breakout today. It's up 4.5%, clearing resistance. You will see recurring themes in the setups. They're all based on the step system. They're all based on core bullish and bearish patterns. And these recur. It goes back to those 3 principles we talked about at the beginning. History tends to repeat itself. You'll see fear and greed and these collective patterns play out in a similar fashion. And that's all we're doing is given a curated list. Etsy was another one that made the list this week, had a nice little high base pattern. Broke out yesterday. Good follow through today, right? Splunk, Tim, as you said, breaking out. Activision is one that's breaking out today. We looked at Activision and Electronic Arts, EA. I think EA might have been on the stock report, but that's a nice little breakout setup. So, Tim, most of these still look pretty darn good, which you think they would if the market's gone up this week, right?
Yeah.
I think your bull list should be looking pretty.
Yep. Yeah. And by the way, if you're a pro member, you should be going through the reports each and every week. If you don't know how to apply the candidates or build proper trades, that's where that step system course comes in. And it's very important to understand true education. Emily, right now we have a promotion on the step system. We usually the retail, I think, is $1,495. We got a 50% off. And for the quality of that course, Emily, I mean, I think you've been through a lot of financial education through your development as a trader. $747 for the step course is quite a deal, isn't it?
Absolutely. For what the community puts out, or for what the coaches put out every single week for you guys to be able to come out here and really save time on, especially if you're brand new and when you can't scan or you don't have the ability to go out and scan and find these breakouts, all these different patterns. This community really does provide that service for you where you save time. And so having another tool like the step system in position sizing and having a stop loss and entry and all the other stuff really also does save you time, but also helps you apply it the proper way, the right way. And then we're here to support you when you have questions along the way too. So it's a no-brainer.
You know, and I love the offer right now. I know the thing about it is, you know, if people are here on our YouTube channel, they're new to our channel, they're like, okay, you know, welcome, come back and join us every day. We love building, you know, relationships with new traders and all that kind of stuff. Anybody who's been around markets for a long time, $1,500 for that bundle right now, a year of education in our pro community. If anybody's a pro right now, you know what you get out of that: 15 hours of webinars a week and all kinds of stuff. These option reports on the weekend, all kinds of different courses that are a part of the pro. And then you tack in the step system as well, which is a premium course. I think it's a wonderful thing. And I did just drop a link to our store. That deal is going on until the 8th as a part of our Independence Day special and all of those kind of things. We'll keep talking about it. But if you have questions about that, buzz Mark an email, team@tackletrading.com. He can help you out. Let's get final thoughts from everybody here, guys. You know, markets 3 days up so far. I'm going to start actually with you, Marky. What are you paying attention to? What's on your mind?
Listen, just like when you come down to support, you should look to, plan on support holding. The same thing holds true with resistance, right? Maybe, you know, if you have some trades and you have a nice update tomorrow following an unemployment report, it gets, and the SPY gets up to that 315 level, you know, maybe look to take some profits on some of your short-term trades.
Yeah, very good. Emily, you next. What's on your mind?
Kind of like Mark, it's, you know, it's going to be a short week. So as we're heading into the July 4th holiday, I'm looking to, you know, cover some of the stock, you know, trades that I have or shares that I have of stock that I've left uncovered while I've been riding the wave. So maybe looking to cover it up for the weekend and just make sure that I have that in case we, you know, hit some resistance levels and start to come back down. Taking profits, certainly, for sure. I talked about that yesterday. I put up I think it was a post on Twitter and Instagram on women in trading to, you know, as you're riding the wave, to make sure that you are moving up your stop losses so that you don't end up giving back all your profits like we see today in Match and whatever the news was on Match. Like, you know, that's been a really good uptrend on Match, but, you know, today, if you didn't have a stop loss, you've pretty much given back some of those gains. So it's just that.
Yeah, managing. I love that. I mean, and both of you kind of in the same vein there, right? You know, markets have gone up. Maybe you have to take profit, lock in and cover calls, something like that. Does make sense with trade management. Tyler, last thought from you, anything?
Two things. Number one, there are a ton of just really great looking breakouts today. Good day to learn what to look for before a break. You take a look at these setups and you say, oh man, I wish I would have, you know, I wish I would have caught Wayfair before today, up 10%. I wish I would have caught Square before today. Look, pro tip, go back and look at the charts before today. Take out today's candle. There's something about the behavior of these stocks, the setup, that gave you clues that maybe suggested that a big move was imminent. I see a lot of things in terms of the Square setup before today that could have suggested that a breakout was coming. Same thing with the bounce in Wayfair. If you want to get better at nailing these types of moves, go back a day prior and study the posture. That's the first thing. Second thing, I feel like Tesla is growing up before our very eyes. This thing used to be a wild child, just naughty, okay? Was very, very hard to trade. I remember our meetings, you know, we're like, we're not touching Tesla. The thing's nutso. And when you look at this the last year, it's so well behaved. It's like you know, a high school reunion, you see your buddy that you was a drunk and a partier in high school. And you know, he's like a priest now. It's like, what happened to you? You used to be so terrible. You're so well behaved. I swear, technically, this has been just textbook almost all year long. And I just, you know, a little golf clap for Tesla. I think it's growing up.
I think probably though Tesla, he might look like he's a priest and a member of the cloth right now, but I bet he's got like a flask of whiskey in his jacket pocket or something like that.
He probably does. I don't. He's doing a dang good job. A dang good job of hiding it.
I don't believe it. Maybe, but then again, I've been behind on this one. Hero, I bow to Hero on Tesla lately. There's no question about it. Matt, you final thoughts?
Yeah, I agree with Ty on Tesla. I mean, there were many times in the scouting report meeting when Tesla was range bound between, you know, 300 and 360. And we're like, yeah, you just can't trust it. You can't trust even breakouts here. I think the one thing that I think you can absolutely trust on Tesla is breakouts. You know, retracements aren't nearly as clean, but breakouts in a momentum stock that have consistency are. look at the last breakouts in Tesla's chart. You know, the breakout from yesterday, we saw the continuation here today. The breakout on, you know, May 29th, you saw the continuation on the upward movement in price. Even in going back from October to February of last year, the breakout of 360 was legit. The breakout of 430 was legit. The breakout of 600 was legit. Even the breakout that it ultimately saw the market tank with the COVID crisis, that breakout of 800 was legit. I think the one thing I trust on Tesla is a breakout. Retracements, they're not nearly as clean, but you know, I think that shows the growth of a company when the traders trust the breakout, when they trust buying a higher price without any hesitation. That shows me that the trading community fully on is embracing a certain technical pattern, and breakouts have been legit here. Every other pattern has not been nearly as clean, but breakouts on Tesla have been absolutely a moneymaker for well over a year now.
Mm-hmm. Mm-hmm.
Well, maybe not well over a year, but about a year.
Well, even that breakout right there, 2 days, we're up 11%. So, I mean, it is a runner. Yeah, there's no doubt about it. My last thought here, guys, I was writing the tackle today, and, you know, we're here. There's 5 of us hanging out. Cody had to bounce a little bit early, you know, and Cody here as well, 6 coaches. We do our scouting report meeting tomorrow. I'm looking at all the names from Team Tackle in the chat here. People that I've known for some of you, new relationships, months, maybe you're new to our channel, new to our community, all that kind of stuff. But man, I've known a lot of you guys for years, and I just got to tell you, community is such a huge part of this whole thing. There's no doubt about it. You can learn to trade, you can learn the mechanics, but knowing I can rely on Tyler, that he did great analysis on the option report, go and get a question answer or something like that. Knowing that we can hang out here and analyze the markets together and give each other feedback and make sure that we're not just getting tunnel vision about the way we think about trading. I don't want to trade on an island. I don't want to just have a computer and a Wi-Fi connection on the top of a mountain and never actually interact with people. I love the community here at Tackle Trading. I'm very proud of it. And I appreciate everybody out there who's putting effort into it and energy into it. Whether you're brand new, whether you're a student, whether you're a veteran, whether you're still developing and growing, if you ever need something from us in some way, participate, be a part of it. Let us know how we can help you, and keep putting your butt in the seat and show up every day. Specifically, even tonight, we do have that webinar here tonight. But I appreciate everybody out there. If you can give me one last hashtag Team Tackle, that's always our official hashtag. And that's all I've got here today. Guys, live tonight, 7 o'clock Eastern. Matt will be here. The elephant will be here, I'm sure. Emily will be here. We're going to have a lot of fun.
So disrespectful to call him the elephant. Call him by his name.
All right. We're out. We will see everybody at 7 Eastern, 5 Mountain here tonight for that support and resistance webinar. And we'll also be back tomorrow for a halftime show. Good job today, guys. We're out.